Okay guys, so welcome back to the channel. So my name is Carlos and I am not a financial advisor, so don't buy a stock because I said to buy the stock. So make sure to do your own due diligence and do your own research before investing your money into any stock. But yeah, make sure to hit the subscription button down below and give this video a thumbs up. Thank you. But yeah, let's just get into this video. So I'll be going through 6 stocks that I've either added more shares to this week or bought into this week due to the huge stock market crash, which is basically sales. So there was a lot of shopping to be done this week. But yeah, let's just get into the video. So the first stock that I actually added to this week but on a different portfolio is Lordstown, and I've never talked about it on this channel. But yeah, so Lordstown is an American department store. It's a chain store that sells luxury and designer good for like the top 5% richest people. It's a very exclusive designer store. So if you think say if you live in the UK, you've got Selfridges, you've got Harrods, but Lordstown tops both of them. It's just for the top 5%. So right now it's trading at $12.21. Prior to COVID back in Jan, it was at a $40 cost base, but obviously it was hit very bad, like most retails, due to COVID. But this is one retail that I know, or I know will definitely bounce back, and we could be seeing a $40 cost base in the next couple years. So this is an opportunity for you to more than double your money, to triple your money, or even potentially quadruple your money. So this $12 cost base is a very good buying price. It's been kind of up and down, so it did kind of go up post COVID, or when the economy started to get better, and now it went as low as $11, now sitting at $12. I bought more shares. I've been buying it since 2 months ago, so I've just been buying it. So I've just been kind of adding to it, and I don't plan on selling it anytime soon. The next stock is Slack, which is sitting at $26.74. It's a team-based app such as Microsoft Team, whereby say big companies or individuals or schools, universities can use it for meetings and classes. So it's very similar to Teams, Microsoft Teams. So I've actually used it myself before I bought into it. So me and Atto, my friend, we both used it to test it out, and it's a very good app. Slack right now has 12 million daily users, so it's growing at a very rapid pace, and that's mainly due to COVID and everything kind of being moved online. So people looking for online softwares to use, or companies and schools looking for online software. And yes, their biggest competitor is Microsoft Team. Slack has the potential to be very big. Whether it can pass Microsoft Team, I don't think so, but even at second best, it can bring in a lot of money. And with Slack, a majority, so over 8% of their customer base is on a free plan, which I think is actually very smart, because they're trying to build that relationship, because they're not as old as Microsoft Teams, so they're trying to build that relationship with their users. So in the future, when they introduce like a price plan, or if you want to upgrade, you have to pay a certain price, companies will be more obliged to pay that price, only because it's what they're used to. It's hard to switch from even if you're on Microsoft Team, it's very hard to switch to a whole new software and trying to learn it again. So it's just easier for companies to keep using Slack. So eventually in the future, they'll probably most likely will introduce a price, monthly payments. Same thing Netflix did when they took away their free trial, and now upped their price because they've secured that customer base. And Netflix as a company have secured themselves, so people are still gonna pay the monthly subscription to keep watching Netflix. The next stock, which I actually talked about yesterday, or in our last video, or second to last video, is Carnival, which is at $12.98. So I'm not going to go into so much details. You can watch our video that we did on Carnival. I'll link it down below. So Carnival is a cruise company, and like I said, just watch the video down below and you get all the information you need. But yeah, Carnival has been, so prior to COVID it was at $40, then it hit a high of $51. Then after COVID it dipped as low as $7. Then in June, as the economy started to come back up slowly, it went to $24. Now with the election coming up, with the COVID cases going back up, Carnival is back at the $12 cost space. And the next stock we've got here is Fastly, which is a cloud computing provider company. So during this pandemic, they're one of the companies that did well and kind of took off, and this is mainly to do with TikTok. So TikTok actually represented 12% of their revenue in the second quarter, and their second quarter went up by 62%. So Fastly right now is sitting at $68 after touching $80 I think last week. So I bought shares, like how many shares, like about 10 shares at $70, and I bought a bit more today at $68. So it's a fast growing company. Its third quarter revenue came out and it had an increase of 42% year on year, which was a revenue of 70.6 million, which is very good. And I can see this company still keep going even post COVID. They've got a lot of companies that uses their cloud-based network, such as Shopify, Boots, and the New York Times. But yeah, the next stock we've got here, one of my favorite stock, we've done a lot of videos on this stock, is Workhorse. So Workhorse is sitting at $17. I never thought we'd see the $17 cost base, which is where I originally bought Workhorse at. But yeah, it's sitting at $17 after a high of 30. So Workhorse is a spec play. It's high risk, high reward, and right now there's a lot of sell-off in Workhorse. The stock price is just kind of going down, and that's because of the uncertainty to do with the USPS deal, which is expected by the end of the year. And I've been saying this since our first video. I still feel like Workhorse will get a majority of that deal, if not all of the deal. But, and even say take ARK Invest, ARK Invest, they've got 900,000 shares in Workhorse, which is a total, I think, $14 million in Workhorse. So if that's not reason enough, then just watch our video down below. We do a more analysis on Workhorse, so just watch the video and let us know what you think. But yeah, Workhorse, I could see it going down further just because the whole uncertainty. And in Workhorse, I've had there's a lot of new investors in Workhorse, and a lot of people are just selling off, causing this stock to crash, because there've been nothing but good news regarding the company. But what's holding it is that USPS deal, and now people are getting scared, and nothing's changed. The company hasn't changed. The USPS deal was always expected by the end of the year. It was never the end of September. It was never October the 13th. But yeah, people are panicking. People are selling off. But take this opportunity to buy into Workhorse, because $17 is a very good cost base. It could easily go up to $30 once the USPS deal is announced, and that's nearly doubling your money. So I've got nearly 110 shares in Workhorse, and I'm not selling not one share until we've got news about the USPS deal. But yeah, if you want a more detailed video on Workhorse, we can do, I could keep talking about Workhorse, but yeah, just let us know down below in the descriptions, in the comment section. But yeah, the last stock we've got here is Skyworks, which we've talked about before in our Apple video when Apple's earning came out, and we talked about Skyworks. But yeah, Skyworks is the company that provides the chip technology for Apple's 5G. So as you know, Apple's iPhone 12 is out, and Skyworks is the company behind the 5G technology in the Apple. And right now Skyworks is sitting at $145, which I feel like is a very good cost base. So I think my average price is 140, so it's not far off. And bear in mind, I invested in this like 2 months ago, and it did go as high as 150, and then it came back down, took a dip, and I bought more shares at 142. But 145 is still a very good buying price. So this for me is a very long-term growth company which will keep growing alongside Apple, because they provide the technology for Apple's 5G as well as Samsung. So 5G is very new and will keep expanding, so we can see this company keep getting bigger in the future and in years to come. So it's a very solid company. Yeah, so that's the 6 companies that I bought this week. So I'm not just telling you potential companies, these are companies that me myself I've bought into this week, I've put more money into this week. You need to learn to take advantage of these dips. Don't let the bad days or the red days or even the past week or two it's just been bad, don't let that scare you. Just keep buying into it, because when we have good days, that just means a higher return for you. But yeah, that's the end of this video. Don't forget to hit the subscribe button down below and let us know what you thought of the video in the comment section, and also give us a thumbs up, and we'll catch you in the next video. Thank you.